What's up, guys? This is Andres from the Strong Family Money Show, and this is episode 4 of Business School 101. I usually upload these by themselves on as parents, and you not have a plan to in your Disney Plus and all that stuff on your computer, right? You can use, and when you're in a caloric deficit, to try to. In this video series, I explain what I think are financial concepts and terms that I think everyone should know. And it's good to know lots of stuff about your money that you make and spend. So, my last episode, I talked about the bull market. In this episode, you got to talk about the yin and the yang, right? So, in this episode, I'm talking about a bear market. So, right now we've experienced, it's kind of weird, but so we got to the end of the longest bull market in recent history by falling into a bear market. We've started to turn that around. So we really don't know how this is going to end up. It could be a correction. I'm going to go over what that is. It could be the start of, slow down growth or contraction. It is a weird time. I don't think, or fingers are crossed, that this will be the only time in my lifetime that we experience something like this, because it really is unprecedented. But some of the characteristics that I'm going to explain right now did happen fairly recently. So a bear market, as opposed to a bull market, a bear market is a long period of decline financially, right? We think of this in terms of, everyone thinks of this in terms of like the stock market, but it really happens across all financial sectors. So like, if we want to talk about it in terms of the stock market, securities fall 20% or more from recent highs. Right at the beginning of the pandemic, we experienced this. We had a sharp decline in the stock market. Everyone was scared that they were going to lose their 401k. Most people lost a lot of money, but if they kept it in there, really made up a lot of ground recently. So it's characterized by widespread pessimism and negative investor sentiment. So something's going on to cause everyone to have a bad taste in their mouth. And really what happens in the stock market, prices don't just say, I'm going to change price, right? What happens is people get scared and they want to take all their money out, right? And that scares everybody. So everyone starts selling. So then prices start going down in the stock market. So it's a decline in the overall market index. So it's seen across pretty much all sectors. It's characterized by 2 months or more of the decline. And a bear market can be cyclical, or it can be long-term. We're gonna find out. We don't know yet what we're going through right now. We're hoping that this is just a little blip, and we recover and start back up again. So there are ways to make money. So in a bear market, right, you can short sell the market. This is very dangerous. You got to be a savvy investor to do this. You got to have money that you can do this with, and this is not the money you use to pay your rent or feed your family. So basically you buy something. You buy, again, in terms of the stock market, you buy a stock. You hold a stock from a brokerage, right? You then sell the stock, you make money, you then buy the stock back at a lower money, and you sell the stock back to the brokerage at that lower money, and you keep the little bit that you shaved off the top because the price in the buyback was lower. So there are ways to make money, but they are very dangerous to do it in this type of market. So you got to be a savvy investor. This has caused, companies aren't meeting their financial targets, and this causes, it scares the people that have money in the market. So it's usually caused by a stalling or sluggish economy. I have my notes here to the side so I can, explain it better. So a bear market should not be confused with a correction. So a bear market is a decline, right? A correction is, we thought everything was great at this time. It really isn't as good as we thought it was, and it's really only this good, right? So there's a a drop where it corrects, or it says the true value of everything is this, but we're still in an upward trajectory. So when you see that, that's a good place to start investing, right? Because especially if it's a sharp decline and then it starts to go up at the same slope as it was previously, because that you're on an upslope. It basically a discount on buying the stock. You get in there and you're able to quickly make up that much money, and because you're still in upward trajectory, but you are able to get a discount on the securities that you're going to purchase, and so you make money on that. So everyone uses the stock market to determine how well the economy is doing. So I actually heard a pretty good story on a podcast I listened to. Forget what podcast it was though, but it was talking about the economy and the stock market. And the economy and the stock market follow the same slope, right? The analogy the guy used was it's when let's say a lady has a dog, a little Yorkie, off leash and is walking the dog, right? The Yorkie will run up ahead of the lady and then run back to the lady and then run to the side and pee on the bush and then run over here and then sniff the other dog. So the Yorkie is doing a lot of work, right? And the lady is just walking from one side of the park to the other, right? Both the Yorkie and the lady is the economy, the Yorkie is the stock market, right? Both the lady and the dog will end up on the other side of the park. The Yorkie just looks like it's doing a lot more work because it gets distracted by a lot of things that are going on. The lady knows where she has to go, right? That's how things usually work, up or down, right? The stock market, right, does a lot of stuff because it is the people reacting, the people that are investing reacting to what's going on. The economy, because it's just the factors that are happening, right? Whatever's going on is going to go on, and it really doesn't matter what you're doing to influence that, right? It's going to happen anyway, right? So the stock market makes things probably look better or slightly worse than what's really going on, but you're going to end up in the same place anyway. And at this point we might end up, the economy is shrinking and the stock market is going up and down, but if you see it going up and down, it's going to follow the same trajectory as where it's going to end up at the end before it makes the other correction in the other way, right? So people who aren't investors probably shouldn't wouldn't say that. I would say don't be encouraged or discouraged disproportionately to what's really going on, right? It works both ways, right? If the stock market is rocking, right, that's great for people that are in the stock market, right? But you have to see what the whole economy is doing in general. Same thing on the other end, right? People in the stock market are losing everything, but if you don't have money in the stock market, then it doesn't matter what it's doing, right? So your slope will probably end up at the same place. It just looks like they're doing a lot more action. So anyway, bear market, different than bull market. We will see what happens here to us in the coming months. Hopefully it's just a little blip. Hopefully we can recover and get back to at least where we were before this whole thing started, because it really is a small amount of time from where everything was good to now. We can make up some ground. It'd be a good point to throw some money in if you have some to throw in. If you have any other terms that you want to know more about, send me an email or a message. I'd be happy to explain it to you. This is on the Desk from the Strong Family Money Show. I'll talk to you guys next time.